Hello, everybody, and welcome in to this week's episode of the Magnify Wealth Podcast. I'm Cameron Gannon, here with my co-host Scott Gannon. Today, we are going to talk about leveraging debt and taxes for your wealth building. So, debt and taxes, they often have a negative reputation. You know, they're looked at as these scary subjects, but they can often be powerful tools for your own financial growth when they are used properly and strategically. So first off, we're gonna dive a little bit into the common perspective that people have behind debt and taxes. Scott, I'll let you get started here.
Yeah, so most Canadians view debt and taxes as burdens. I mean, and for the most part, taxes are burdens, but the way we deal with taxes is really how we leverage it, if you will. Like, I think the title's a little funny in that leveraging taxes. Why would you want to do that? But you can. It's just the word leverage isn't directly borrowing your taxes, just so everybody knows. But let's talk a little bit about how Canadians generally see debt. So this has been ingrained in Canadians for a long time, and that was maximize your RRSP, pay off your house, and everything will be fine. So the real key here is, number one, is putting money into an RRSP for the rest of your life or for your whole life is, while it does save you taxes on your tax return in a given year, you are creating a larger and larger and larger tax liability over time. But I'm not going to talk a lot about that today. I just wanted to remind everybody. What I want to talk about is the debt part of this thing. So the biggest thing here is so many Canadians associate debt freedom with financial freedom, and they are not synonymous. Debt freedom does not mean you are financially free, because you cannot pay off the cost of living. I'll give you a quick example here. Let's just say you've got a house, you pay it off, and now you lose your job. Okay, so you might have some savings, you last a few months or whatever. Let's just say that your whole wealth was tied up in that house. Now what? Well, you don't even have any way to pay the property tax, let alone put food on the table, as well as deal with your utilities. So your roof is now at risk. And to actually go back and remortgage the house, will it a job? That ain't happening. So here, the key area is that, again, debt freedom does not equate to financial freedom.
Yeah. Well, the way the wealthy look at this is that debt and taxes can be tools for growth through their own mindset shifts and their own strategic planning. So to look at it from the perspective of Robert Kiyosaki, who is an expert in this world and talks a lot about how the wealthy use debt and taxes to become financially free, he looks at debt as something that isn't inherently bad, responsibly. And taxes, they can be minimized or deferred, but primarily we want to look at minimization when using the right strategies. So just so you guys are aware that everyday Canadians, not just the ultra wealthy, can leverage these concepts, and the way we promote doing it is through the infinite banking concept, where there are incredible tax advantages and you're building a leverageable asset.
Quick thing there, Cameron mentioned about not just for the wealthy. I mean, this is the theme of our whole value here, is that we help everyday Canadians, right up to wealthy ones as well, to treat or act like the wealthy, because hey, they've done it and it works.
Exactly. So what is infinite banking? Well, we do talk about this every week, but if this is your first time on, it's a strategy using high cash value, dividend paying whole life insurance as a personal banking system. So you build cash value. So in essence, you minimize your death benefits so that you can maximize your cash value, which is guaranteed to grow every single day tax-free. And it can be leveraged in the form of policy loans or insurance-backed bank loans. So with policy loans, you have no credit checks or approval processes. You have flexible repayment terms. Your policy continues to grow every single day tax-free while it's being used. And the interest is tax deductible when you're using the funds for investment purposes, and that's where a lot of what we talk about goes.
Yes. So just in a nutshell, infinite banking, I mean, it's, even if you're not in business, you are essentially creating a separate business of banking, and you can treat it that way and use it that way. So what's the tax advantage? Well, when you borrow money, you're borrowing someone else's money, so that's not taxable. So you can use that to aid in cash flow in a certain situation, or invest in cash flowing assets, ideally, that produce additional further cash flow. So you pay for it, so it finances your debt plus gives you free cash flow to do other things, whether that be new investments or financing your lifestyle. Like, don't forget, when I was talking about traditional Canadian advice was save your money in an RRSP, pay off your house. That was all about deferral of life and deferral of your lifestyle till some foggy area in the 40 years in the future. When what we talk about is living life as well. So that additional cash flow can be a lifestyle enhancement. And if you're in the right investments, that can carry you right through until the end of life. So that's kind of the idea here. But again, using debt to that advantage is just like another tax minimization strategy. And of course, finally, carrying this all the way through, you can also have the tax-free death benefit. Cleans everything up when you're dealing with the properly structured life insurance.
The death benefit reminds me too is, what's the point of deferring your lifestyle 40 years down the line when there's never a guarantee you're going to get to experience it?
Exactly.
So how do we also use this to multiply your capital usage through debt? And that is with life insurance, you can access your cash value without liquidating the cash value. So that means your cash continues to grow every single day tax-free while you use borrowed money from the insurance company backed by that collateral. That means you get growth inside your policy and growth outside your policy, aka multiple use money.
Yeah, let's quick example of that. So in case this is your first time watching this podcast, we talk about this all the time. That's how we multiply that use. So if you have like $100,000 sitting in a life insurance policy and you have an opportunity, you can access 90% of that on demand, unstructured loan. So you order $90,000, put it into the other program. Now you've got $190,000 working for you, not still 100. So when you borrow that 90, the 100 inside the insurance policy is still growing at interest from 100, not from 10.
And to reduce tax too, when you do borrow and it's used for investments, that the interest on that's tax deductible, so you get savings there.
Exactly.
And you have infinite growth in your policy all the while you're doing this other stuff. Your cash value never stops growing.
Yep. Guaranteed to get bigger every day, no reverse gear.
Exactly.
Never goes down.
So how do you get started?
Well, first of all, like anything, and we talk to people for the first time, is what is the goal? Like, what do you want to accomplish? And then of course looking at your current resources and cash flow, and what do you want to have happen? So then we just tailor that around what you want. So we never should on anybody, and what we do is we say, what do you want to do, and what's the most tax efficient, cash flow efficient way to get there?
Yeah, and what like you said, tailor what they're doing. It's important because this is a very specialized plan that we create. So you do want to choose the right coach, work with an authorized infinite banking practitioner to make sure you do have the policy structured specifically for you, because there's probably over 1 million ways you can structure these, and it should be done for you and not a boilerplate policy that's sold to everyone.
Yeah, which is important, is that that's about coaching, and you need to be talking to somebody that's authorized and understands how infinite banking works and how to maximize the efficiency of your plan with it.
And going along with choosing the right coach is someone that's going to help you understand the numbers too. You know, when you're doing policy loans, you need to understand the interest rates. You need to understand why the interest is being charged, and your options for repayment, which basically are however you'd like to do it. And finally, you want to be coached along with leveraging for investments as well. So that's figuring out what do you like and what are you good at. And we do often promote cash flowing real estate and business ventures in areas where you are an expert.
Ultimately, that's up to you though. Whatever you want to do, we have knowledge in certain areas. I've been running my own business for 30 years, as well as I've been a real estate investor for 12, actually going into my 13th year, actually almost 13 years now in real estate. So yeah, I have some experience in both those fields and certainly can help and coach along. So
yeah,
let's start with
let's kind of wrap things up.
Often asked questions.
Yeah, some frequently asked questions. Is debt risky? Well, debt can be risky. It's less risky when done strategically and when borrowing against your own assets, which is what you were doing with infinite banking.
One of the other questions that gets asked is when do I have to pay this back, or what if I can't pay it back, or what if? And that's a great thing about these, what we call unstructured loans. So what an unstructured loan means is you do get charged an interest rate because you're using insurance company's money, not yours. That's key. But other than that, there are no terms. You don't have a payment amount or a due date. Now, do we encourage you while you're actively at work to pay these down? Yes, because we do have strategies to maximize your tax-free income in retirement. So we do want to see you arrive at that point in time, more or less, maybe not fully out of debt on these things, but certainly as much maximum cash ability as you have. Because always remember, as you pay it back, that all that does is give you more collateral capacity or more ability to access for future opportunities.
Yeah. And with these unstructured loans, the policy loans don't affect credit scores, your debt service ratios, and they don't require approval. They are on demand. And finally, is infinite banking suitable for everyone? Sure, go ahead.
Sorry, you want me to take that? Or?
Go for it.
I want to talk too. So understand that infinite banking as a strategy, talk about this all the time. If this is something you're planning to do for 2 or 3 years, don't. That's not the idea here. This is a long-term wealth strategy that 100% you can start to implement you can start to utilize right away. But if this is something that you want to utilize and
get rich quick,
and then it's not a get rich quick scheme or anything like that. It is an idea to multiply the use of your money immediately. But if it's a short-term plan for you, it's not going to work. It's not going to work. It's not, and we simply won't do it.
Yeah. So to wrap things up, guys, debt and taxes, when leveraged strategically, can be key in your transformational in your journey for financial freedom. So that is it for this week, guys. Please do subscribe. Please leave a review, like, share, click all the buttons that are under the video. Thank you guys for tuning in to the Magnify Wealth podcast.
And a final reminder, make your money work as hard as you do. Have a great week, everybody.
Thanks for tuning in to the Magnify Wealth podcast with Scott Gannon. Remember to subscribe on YouTube or your favorite podcast platform for more insights on the infinite banking concept. Until next time, remember, immediate action is the most efficient way to achieve your goals.